Welcome to my more important chart appraisals on Thursday, the 14th of April, with me, Richard Perry, market analyst at Asset Markets. We've got a fairly sort of mixed open on the European session. I think sort of an element of caution has crept back into the markets. You've got the oil price, which is slightly lower again today, and that's sort of coming ahead of this Doha meeting, this crucial Doha meeting on Sunday, and that's sort of generating a little bit of caution in the oil market, and it's interesting that we've seen this sort of filtering through into the equities. Now we've still got this dollar rally, this big dollar rally in the last few days. The Chinese trade data that came out yesterday showed that, or suggested that the exports in China were much stronger than expected, and also imports as well, and that sort of gave risk sentiment a bit of a boost, and sort of the FOMC, which has been focusing so much on this global situation, aka China, in the last few, well, certainly the last Fed meeting, that sort of unwinds that to a certain extent, but exactly how much that can generate some upside in the dollar remains to be seen, because obviously it is there was the suspect that this was a fairly seasonal bit of data that could well be sort of unwound in the next reading, and we've also got an element of support coming through for the treasury yields that has certainly helped to support the dollar, but the one factor, as I said, the oil price just slightly off the top in front of that Doha meeting. So I think Doha is something that the markets will be looking out for. But this dollar strength continues to run through, and is a theme throughout the forex trades that I've got through here. But it's interesting that the yen is not weakening as much as certainly the other forex majors, and that just gives you a reflection of potentially a little bit less of the market confidence coming through there, and also gold is unwinding some of its losses. So some little interesting signs of possibly a turn in sentiment once more, certainly with equities just slightly lower today. So as I said, we've got all this going on, and we've got a fair bit of data out today. Just show you. Starting off with this is interesting one. This was the weekly EIA oil inventories from yesterday, much higher than the expectation of around 2.4 million barrels, and I think that has also contributed to the turnaround in oil in the last sort of day or so. And we've got also this morning the Eurozone CPI data, the inflation data, is expected to be confirmed for the final reading at 0.1%. Negative, sorry, 0.1% negative is the expectation there. And then we're going to look towards UK Bank of England meeting this morning. No expectation of any rate hikes, and also no expectation of any changes to the voting structure, but with 9-0 there. And then US inflation is the big data today, and that's expected to just slightly improve to 1.1% on the headline, but also on the core data is actually expected to just come in line with last month at 2.3, so just flattening off a touch on that data. But that inflation data this afternoon could well have a driving impact on the dollar, and how much this dollar rally that we are seeing can continue. And then finally we've got the weekly jobless claims, 270 is the expectation there. So a fair bit of dollar data to drive markets there this afternoon. So my chart today is Euro Sterling. Now we've had a very interesting sort of correction in Euro Sterling. We had this breakout above 79.30. Had a correction off that underside of that old uptrend channel back to that 79.30 breakout, and forming support. And this is interesting because we've seen the RSI back to 50, which is around about where these sort of rallies in these corrections in recent times have found support on the RSI. Now 48, I think it is. Is it 48? Yeah, no, 47 is the 47, 48 is sort of that absolute low with the March correction, but certainly the move back to 79.30 is interesting. Also the 21-day moving average, which flanked the uptrend channel on the way up, just slightly stalled a little bit, but has subsequently since again become the basis of resistance, 79.35, 79.36 at the moment. So it seems to be that this could well be a chance to buy. However, the one thing that's holding me back from this is this sort of head and shoulders top pattern we've got here. Very near term pattern that could well see us back towards a 78 figure. If it continues to go, but it certainly seems as though this rally that we've had has unwound it and back through the neckline. So maybe it's sort of questioning whether that is going to be a corrective pattern or not. But you've got the hourly moving averages, which are all falling away now, which is not all that positive. Also, the configuration of the momentum indicators is not that great either. You've had the RSI unwinding back to 60 and beginning to just sort of lose a bit of steam. So it'll be interesting to see now today if the bulls can battle with this euro pulling higher, and whether this support around that sort of old sort of support band around 79.30 can hold. Which 79.30 being the breakout level from this daily chart. So a very interesting support level coming in now around 79.20 on the intraday chart. Again, if that gets broken, I think that's going to continue a correction, possibly back to sort of the 78.40 level, 78.30, 78.40. But obviously that is on this daily chart. That is your key reaction low, 78.30. Which was, I think if you broke that, then you're going to be looking back towards the bottom of this sort of trading band that we saw the breakout from. So I think 78.30 to 79.30 is sort of 100 ticks worth of pretty key support now. The top of that support band is holding, but if you start to see this little mini technical rally that we've got on the hourly chart just losing steam, which it could well possibly do, then we could see further correction back into that support band. But at the moment, we've seen a little pickup, but that pickup needs to break through the initial resistance, which was that intraday high yesterday of 79.80, 79.85, and the breakdown of that top pattern, which would be 80.20, which was where the sort of the resistance starts to come back in again. So that is as this market rallies, we could see that 80.20 mark broken. But as I said in the morning report, I think this one's at a very interesting near-term crossroads with this old breakout support of 79.30 holding pretty much for now. But will it continue? So I wish you good luck in your trading today, and I will speak to you later.